Dr. Shane Oliver, welcome to YBR Property Insights, mate.
Thanks for having me.
Last time you and I sat together, maybe 2 years ago, I can't remember, Property Summit?
Yeah.
AFR?
AFR Property Summit.
The AFR Property Summit. It
And
might
you
have been
outed
last
me
year.
as a NIMBY.
I did, because I was just marking around with the audience, as we tend to do. But one of the things in that meeting, and you are the chief economist, and you are currently head of investment strategy at the AMP Bank. Is it AMP Bank, AMP Group?
What's AMP Group?
AMP Group, which for most people who may not know, it is a massive organisation. It's nearly the size of a public service in terms of its size. You've been there for a long time. You guys do research on lots of asset classes, and I want to talk to you about two asset classes. That is interest rates, in terms of being, not so much an asset class, but interest rates and what's coming up on the 30th of September. But probably importantly, I'd like to talk to you about the residential property market asset class. At that AFR summit, it was called in order to get a handle on the government's strategy, Labor Party's strategy, for building 1.2 million residential dwellings in Australia, across the country, over a 5-year period. What you were there, you listened to developers address the audience. On the panel we're on, there was a developer on there. What do you think about that ambitious policy?
Well, in theory, that's the sort of thing you need to do because of the shortage of housing in Australia. But the problem is that it wasn't achievable, and to some degree it now lacks credibility. So that was a couple of years ago. So it's 5 million homes over 5 years, which is 240,000 homes a year. And we're currently running at, I don't know, maybe 180,000 dwellings a year. So we're 70,000 short. The problem is that when we had that AFR Property Summit 2 years ago, the population growth was surging. We were up around, 600,000 population growth, 500,000 of which was net migration. And of course, that meant that the underlying demand for housing in Australia was through the roof. And it had led to a huge shortage, which we think we still have. I think we're about 200 to 300,000 dwellings short in Australia. And so even though population growth has slowed back down again, still pretty strong though, it's about 300,000.
Which is more than a normal.
It's more than normal. Yeah, you'd be a little bit below that again. But it's slowed down, and we are seeing some pickup in home construction, not a lot. So maybe on an annual basis, we've now come back into balance. Underlying demand for housing is probably running around 180 to 190,000 dwellings. Home building is about the same. So you're back in balance, but you still have that shortfall.
The backlog.
The backlog, which is built up. And unless we can build something like 240,000 homes a year, or 60, 70,000 more than we're currently building, that backlog will remain. And that means ongoing upwards pressure on rents. They've cooled off a little bit, but looks like the rental growth is bottoming out, starting to pick up again, and ongoing upwards pressure on home prices in Australia. And you can talk all you want about negative gearing and capital gains tax discount and super funds investing in housing and so on and so forth. But the bottom line problem is we just don't build enough houses relative to the number of people in Australia, and demand is greater than supply. And guess what happens? When that happens, house prices go up.
So, you're a smart guy. You've been around a million years, and you have a PhD in economics. You head up the analytical. You got a big team at AMP, but you head up the analytical team in terms of they all report into you. Do you have any idea what the solution could look like?
Well, it does mean two things. You've got to get the population growth down to a sustainable level.
Yeah.
That's part of it. And the other part of it is you just got to build more homes. And so I thought when they come up with that number, it's like a good objective, but unless you can actually do that, then it doesn't happen. Part of it in the short term has to be more units. Unfortunately, I'm a little bit skeptical of too many units because you end up with urban ghettos and overcrowding, and people just get annoyed in that jammed up situation. But I think ultimately, if we want to continue to grow our population at a decent rate, we've got to expand beyond our big cities and decentralise. And that to me is probably the longer term solution to this. Short term, yeah, it's more units. Back in, was it 2016, 17? I think we got close. We got to about 230,000 dwellings in 1 year. So we got close, But back then there was a lot more units in the mix, a lot less houses. So now you've got a lot more houses in the mix, less units. Obviously, it requires more resources to build a standalone house than it does a unit. So you've just got to make it easier for developers to get the property, rezone it or whatever is required, get the approvals, make that faster. You've got to find ways to put up properties quicker. It's now taking, as we heard in this productivity summit the government had a month ago, it's taking 50% longer today than it did 10 years ago to build a home or a unit, which is just a joke in the great scheme of things. We've got more planners in councils and outside of councils than ever before, but yet their productivity in terms of getting approvals through has just slowed down to a crawl. So you've got to look at all these sorts of things. But as I said, ultimately, you just keep jamming more people into Sydney or Melbourne, you're just going to end up with overcrowding. No matter how beautiful you make the apartments, you've got to go beyond that. If you look at places that have more affordable housing, even though they've got more people than us, Europe, I mean, Germany's got far less land that you can live on than we do. I know people look at Australia and say it's all desert. Well, big chunk of it isn't. They've got far more livable land than we do, but their home prices and their home price ratios are far more affordable than they are in Australia. And they managed to do that by having lots of big cities, but they have lots of towns outside that, which are sizable cities in themselves, 100,000, 150,000, 200,000 here, and they spread it around, whereas we haven't really done that. We've just concentrated on the big cities.
So I saw Anthony Miller. Anthony was on our podcast recently from Westpac, and he subscribed to that view. In fact, he's made a submission to the productivity, not the product commission, to the round table along those lines about sort of gearing up regional areas, put them in a position to sort of for us to put our populations into those environments. And in other words, build more houses in those areas where, like theoretically it might be cheaper, theoretically it might happen quicker because you're not putting you don't have the same impact, for example, on the infrastructure that you might have in Sydney if you want to put another couple of thousand houses because Sydney's already got 5 million people. So is the AMP have a position on... Did you have a position for the round table? Do you guys? Did you make submissions?
We didn't put one in. I did write. I've written lots of research on what we need in terms of productivity generally, and in terms of housing. And my position for a long time has been, we've got to decentralise and make our regional centres, bigger centres than they are. We should be able to have people living in Orange or
100%.
And have decent transport to get to and from.
Yeah, you need a better road because that
road because
that road to Orange is a shocker.
It's not a good one,
No.
and you need a better train system to do that. So they're the sort of things we should be thinking about. Pushing it through local councils. I mean, this is where the NIMBY thing comes in, and I kind of think, I'm lucky. I live in a beautiful part of Australia, and my parents went there in Sydney's Northern Beaches, and they went there when no one wanted to go there, so it was real cheap, and it was sort of halfway.
A long way away in those days.
Long way away. It's still a long way away. It still takes me forever to get in, but...
Worth living there.
It's worth living there. It's quality of life. Now, if you start jamming lots of apartments in there, that quality of life will go down. So in that sense, I'm a bit of a NIMBY. But then I reckon that's the story for the whole of the city. You jam too much stuff in, the quality of life will go down. People will complain that it's taking longer and longer to get somewhere. You go on the metro these days, and the metro is fantastic. Don't get me wrong. It is fantastic. But guess what? You get it on at peak hour, it's chockers. Already, it's chockers. It's the same with our freeways. We build these freeways, we start with 2 lanes and then we realise the M5 is jammed up. Oh, we'll have to widen it, make it 3 lanes or something. And then a little while later, we're going to do it again. This is going to keep going on and on and on. And it's not going to get anywhere. It's just going to lead to more frustration and people feeling more like their quality of life is going down. And that's not the way to go. But if you can have a situation where more people can live in Orange or Geelong or Port Macquarie or wherever it is, then that I think is a sustainable solution. What we've got at present is not sustainable.
So, what do you think about? I mean, we're doing our own round table here. There it is, right there. But what do you think about? In order to attract people to live there, sure, the house might be at a price they can afford, much more affordable. It might be actually better to live in a place like Orange because it's you're not getting jammed as hard as you are in the city and here in Sydney. What about you think about the sorts of initiatives where the government says, and I remember this happening in the 80s we used to have, for people affected in a drought area, if you're a farmer, you used to get a special tax status, and they were sort
Yeah,
of
yeah.
declared. They were
Oh, special economic zones,
special zones,
lower
yes.
tax rates or
Yeah,
something.
and they gave them lower tax rates. I mean, I
Yeah.
wonder whether or not anybody's ever thought about enticing people to live in those places, like Orange, like Ballina, like Port Macquarie, like the place you mentioned, Wagga, wherever, big areas.
Mm.
Entice people, said to people, if you go and live there and work there, and particularly if you're a professional, so you're a
Mm.
professional services person, that your tax rate, there's a rebate. Your tax
Yeah,
rate,
yeah,
same, but
yeah.
you get a rebate for living in those environments. That would attract developers as well.
Yeah.
Because developers say, well, hang on, I can find some decent buyers here, and all of a sudden, we would get more demand from those areas. Why do you think? I mean, you've been watching this space, commenting on this space, probably being consulted to by various treasurers from various
Mm.
parts of government over the years. Why do you think governments don't embrace the full deal, like go hard at it and really push into getting people into more regional areas?
Yeah.
Why do you
It's
think it
a
is?
bit of a mystery to me. Um, I mean, to some degree, maybe they're too purist. They don't want to interfere in the free workings of the market. But then they talk about user pays
Yeah,
anyway.
totally.
It's the case with roads and this challenge now: how do you make people with electric cars pay? So when you live in a city, you're consuming more resources to operate that city. Whereas if you're in a regional centre, you should get a lower tax rate. I don't
Yeah.
know how it happens, but maybe it should be a reduction on your income tax rate or something
Or
like
just a
that.
rebate.
Or it's a rebate.
Yeah.
Give you a rebate for living in if you can show that you're living outside a big capital city, then
Yeah.
you get a rebate on your income tax.
Yeah.
And likewise for corporates, if they set up out there, they get a tax deduction on their corporate tax.
Totally. That's
payments.
it. By a lot of corporates would like to do that.
Yeah, that's the way it should work. And I think we had a fantastic opportunity at the time of the pandemic because it gave us a pause in immigration. People were working from home. That gave us a little window to think about, well, how better could we rearrange ourselves? And at that point in time, people were happy to move out to regional areas. Then they find the pandemic ends and they've all got to go back to the city, so we go back to traffic jams and things. But these are the sort of thinking. This is the sort of thinking we need. Different sort of thinking to sort of give people a stick and a carrot to get out there in these regional areas. Regional centres have been complaining for years that they've lost their numbers, that regional Australia is in decline. This would reinvigorate it.
Yeah.
This would get it going again. And I think it would be a fantastic thing to do. But unfortunately, government doesn't seem to be that keen. Maybe it's because, and this is the Gen Z conspiracy theory. Well, it's just the government's run by baby boomers and Gen X, and they don't want to do anything to stop property prices continuing to surge. Maybe that's it, and so they don't really have a serious effort because most voters, out of interest, are property owners.
So when it comes to economic policy for any government, usually you would expect it to be based on pretty sound principles. But one of the principles that I've always thought of in relation to property, at least, and economic policy, but one of the principles I thought is quite an interesting starting point for Australia is that Australia is one of the few countries in the world that has 50, I think it used to be 50, close to 55% of their population living in 3 cities.
Yeah, yeah.
There's no other country does that.
It's most measures of urbanisation, Australia is at the very high end.
Yeah, totally.
Like I think in terms of people living in big cities, it's 95% or some stupid number like that. America was like something like 80%. We have a really ridiculous situation in Australia. So if you want to explain expensive property here, it's that function, that high urbanisation, concentration in big cities. They're all on the coast, and coastal cities tend to be higher prices than elsewhere. And then, of course, we put restrictions around the cities. Like Sydney is boxed in, and I'm not saying that's a bad thing. It's actually a good thing. We've got all these national parks and what have you, and the mountains, but it restricts how much you can actually do ultimately.
Yeah, and if you had a piece of white paper though, and you were running a team to review something and to come up with a policy, you would actually put all your risks down. And one of the risks would be concentrated risk for Australia because there is a concentration of too many people living in 3 cities.
Yeah.
And that's a concentrated risk deal. Like if you're running a business, if you're reporting to AMP, you would look at risks for the business.
Yeah.
And like as a pure economist, that would be one of the first things you look at.
Mm.
And one of the things, and I think, so not only is your solution a good idea, but your solution seems to me to solve the concentrated risk problem.
Yeah.
And it's, to me, I just do not understand why it has never been addressed. I don't understand the politics of it, but I thought, and if perhaps government have asked you about it, have they ever come to you and say, look, Shane, look, can you give us some ideas what you think about this? Has the Treasurer picked up the phone and
No,
talked
not
to you?
in recent times.
No.
Not in recent.
Previous Treasurers?
Previous, well, the local member did. The local member was Jason Walensky, and he asked me about it a few years ago. Then he lost his seat, so
It didn't help.
it didn't help. To their credit, I mean, Whitlam did a lot of stupid things economically.
Yeah.
But they did have a focus on decentralisation. Albury Wodonga was put up as an ideal place, and it probably still is an ideal place.
And booms. It's amazing. Albury, well, those two cities, those two towns, whatever you call, they are both booming as they are big distribution points for Woolworths and everybody else for around the country. Like they are hubs, massive hubs, and a lot, and supports a lot of jobs.
Yeah.
And by the way, but what's interesting about Albury, not Wodonga, because I haven't been there for a while, but Albury, is that house prices have boomed there.
Oh, really?
Yeah, because there's a shortage of property. Because I was down there doing something, and they were telling me, we were in an office down there, and they were telling me the same thing. If I could just flip over to the economy. So, on the 20th, on the 30th, I should say, we're having the RBA meeting.
29th, I think.
29th, is it? It's a 2-day meeting, though. Isn't it a 2-day meeting?
It's Monday, Tuesday, so they give us the result on the Tuesday.
So we get the result on the 29th, do we?
29th,
okay.
yeah.
So they're having a meeting. Of course, we've had 3 rate reductions this year. We missed one in July.
Sorry.
I'm right.
You're right.
Yes.
The next Tuesday is the 30th.
30th, right.
Starts on the 29th.
So they'll opine or give their opinion anyway at 2:31 on the 30th on Tuesday. So we missed the rate reduction in July, whilst the market pretty much pushed it in and said it was going to happen. And the money markets also responded prior to the meeting. 2 questions for you. What do you think about for a consumer, a borrower, what do you think about today, these days, under the new regime of the Reserve Bank, under the new, the 2 Reserve Bank boards, what do you think about using money markets predictions about rate reductions based on them looking forward as to what's going to happen in the economy versus the way the RBA seems these days to be only interested in one thing alone? What did yesterday's data tell me? And I'll give you the outcome. I'll tell you what I'm going to do with the interest rates. There seems to be a shift. There's no preemptive moves anymore.
That's right.
What do you think about that? And what would you say?
Well, that's a problem.
Yeah,
that's a problem.
Yep.
We used to manage it more on a preemptive basis.
Yep.
So these would be our forecasts and our views, the RBA's, that is.
Yep.
And then we'd set interest rates on the back of that. Then that seemed to change around the time of the pandemic or just after. And it became a little bit more backward looking. Now it seems to me anyway, more backward looking. And what the RBA will tell you on any particular day will be a function, as you say, of the data that's just come out. And then that's why this year we've seen an RBA which seems to run hot and cold.
It seems hot and cold.
Yeah.
But basically,
well, I think it is hot and cold. Back in February, it cut, but it seemed rather hawkish.
Yeah.
And then
July didn't cut.
It's gone all over the place.
Yeah.
And so the July meeting didn't cut. So it cut in February, May. The July
missed, and then August.
May was quite dovish. So they were hawkish in February and April, I thought. Dovish in May. Back to hawkish again in July. Then they cut in August, and they were dovish. Now I suppose it's September, so they'll probably be a bit hawkish again.
Because
which seems a bit odd in a way. It's like you're responding to the most recent data, and we know the data itself runs hot and cold. You go through phases where the inflation numbers are a bit on the upside, then it goes through a phase where they're a bit on the downside, and the Reserve Bank to some degree seems to be reflecting that because it's become a bit more backward looking than it used to be.
Well, and if we could just go back, if we go back to the February meeting, which I think was the 18th of February this year, what sort of got me a bit confused was off the back of the data, I wouldn't have expected a rate reduction at that point. But it seemed like they took the previous 2 quarters, I forgot about the quarters before that, and The previous 2 quarters, I think, as I recall, showed were like showing a run rate of 0.5 each quarter. So we're
Yeah,
looking at
yeah,
a
it
sort
was
of a
low
2,
side.
yeah, low side. And it looked like she ignored the first 2 quarters of the year
Hmm.
and gave us a rate reduction off the back of that. It was like, and she pretty much blindsided the market because the money market was running a different direction.
Hmm.
Then, as you say, there was another rate reduction a bit later on. And then the July meeting, she said, no, I'm not going to do that because look, it's pretty obvious we want more data. So she waited to hear what she's going to hear. I think it's 28th of July.
But
Something she got
July
for,
was when it was almost 100% priced in.
totally.
And most economists, one or two, were looking for a cut.
Well, the ones who said
Yeah.
we predicted she would make a move. I don't know. I didn't really hear from them saying that they wouldn't, but there's plenty. There's a couple of them who said it, but the July one, she was definitely saying she basically said to us. They said to us, I need more data. I'm going to wait for the 28th ABS stuff to come out, the 20th or 29th, whatever data came out. Then they gave us a reduction in August. Do you think the new program, what looks to be the new program of just responding based on the data, fresh data, I have it in front of me today, is the right way to do it? Or do you prefer the old preemptive process?
And I prefer the preemptive process. So I think what happened here was that they got caught out by the uptick in inflation coming out of the pandemic. Then they became more backward looking in response to that. And it was actually probably started a little bit before that, because in 2020 they said, well, they started to say through the pandemic, we're going to really wait now till inflation starts to take off before we start raising rates. So therefore they probably now feel they waited too long. So that's why they've become more focused
So
on,
more a reaction to
yeah,
what they
more,
didn't do.
reaction to what they didn't do. And then on the way down, it's been similar, that they were caught out on the way up. So therefore they've been cautious on the way down in cutting rates. But you could argue that it's led to monetary policy which has been a little bit too tight. I mean, some might say, well, the property market's taken off, but the property market is only one part of the
It's one
economy.
asset class.
It's one asset class. You've got to look at all the other bits, and the overall economy has been pretty subdued. Yes, there's been strong employment growth, but it's mainly because of jobs in the public sector, in aged care and healthcare and
NDIS,
NDIS
etc.
and that sort of stuff. Private sector jobs growth has been pretty weak. And so all up, I would say that monetary policy has been a little bit too tight than it really should have been. And it's partly because of this lagged or backward way of looking at things. Whereas I think the previous approach, where they take a more forward-looking approach to things and say, well, look, we're forecasting inflation to be around target. We've only got modest pickup in economic growth. Why have we got interest rates at these still relatively high levels?
Would you be prepared to sort of maybe offer your views on what you think, or perhaps speculate the RBA is thinking of in terms of what is growth? So, what is a growth number? So, in the old years ago, we'd always be looking at 3%,
That's
but
right.
at a 3 in front of it. They're talking, 2.7 sort of thing. I think, and the budget was 2.75 or something like that.
Yeah,
Do you think that? And we just had a 1.8, like
that's right.
looking forward. Do you think we're getting closer to our, let's call it closer to a new GDP growth number
Well,
at
maybe.
225, 250?
Well, it could be something like that. Yeah, it used to be 3.
Yeah, it
It
used to
was
be 3.
about 1.5% population growth, 1.5% productivity, and then adds up to about 3. But now you could argue it's 2 to 2.25, or maybe 2.25, or something like that. So at 1.8, we are getting close to that,
Yep.
but we're still below it, and we've spent quite a bit of time below it. And some people get obsessed with per capita GDP, and it's been below it for a long,
A long time.
So in that sense, yes, we are getting closer to it, but there's still a fair way to go. And the latest data, which came out for, I think it was the June quarter, it was a little bit on the upside, but you just got to allow that some of that was distorted, I think, because consumer spending seemed to pick up in lag. So we had the cyclone Alfred, which depressed things at the end of March, and then Queenslanders and northern New South Wales people suddenly spent again at the start of March, start of April. We also had Nintendo Switch, which often when these new products come out, they give you a bit of a boom.
Hard to believe though, but it does.
It does, yeah.
Yeah,
And then we
Taylor
had,
Swift.
well, Taylor Swift is the same sort of thing.
Yeah.
I'm kind of excited now because there's a new Taylor Swift album on the way, I think. Is it October sometime?
You're a Swiftie, are you?
I am, yeah. I went with, Diana
Yeah,
Messina.
yeah. She's been on our pod,
Yeah,
yes.
we,
Yeah.
we both missed out on tickets. I spent hours on that day trying to get tickets. And anyway, it was coming. There's a friend of ours managed to get the ticket, me, Boo, who works with us, and she managed to get tickets for herself and three others. And then just before the day of the concert, they released some side tickets. So you don't actually see the front of the stage. You sit on the side, and we thought, I get anxious when this happens. I've got to try and get these tickets. And so Deanna and I tried to get them, but me, Boo, managed to get them for us, and they were $65.
That's cheap.
That's cheap. And I reckon it was just as good because you're actually down quite close. It's just that when she's in front of the stage, you can't see it. But if she goes out on the catwalk, you can see it perfectly well.
But
So,
there's quite an interesting point. Like, whilst it sounds, yeah, a little flippant. These events, like the Nintendo Switch being released in June,
Yeah.
and Taylor Swift, the impact that they can have on the economy,
mm.
it sort of informs us a little bit about the quality or maybe the
Well,
reliability of data
yeah,
of financial data or economic
yeah,
data.
yeah.
It sort of informs us a little bit in that we've got to wait for things to smooth themselves out a little bit.
Yeah.
And whether we can't take something too seriously. Who would think that, I mean, all right, let's say she took $1 billion, I don't know,
Yeah.
whatever she made. But still, you wouldn't think in an economy our size, relatively speaking, that it would have such an impact. But it definitely will have for a quarter, or definitely for a month. But it will have an impact for a quarter.
Yeah, and then you've got to wait and see whether it was sustained or not. But I
Usually
think it
not.
also tells us that Australians were feeling kind of stretched, and so they prioritised their spending, like whether it's Nintendo Switch or Taylor Swift. They say, I'm going to have that, but around that, there's not much spending. It's the same with sales activity. So we have the end of financial year sales, which I didn't think used to be much of a thing, or the
Friday,
Black Friday. Where the hell
which
did
is
that
in
come from?
November.
Some American invent.
Yeah.
And suddenly that becomes a big thing.
Yeah.
And people hang out for that now because they know when you go to Harvey Norman or wherever, you can get something at 20, 30, 40% less.
Yeah. Yeah.
So you don't spend in the normal times, you hang out for these sales. And therefore, in the quarters or the months of the year where you have these things, it really distorts the data.
There's a distortion.
And there was a bit of that in the June quarter as well, along with we had Easter. And then at the end of the Easter week, Easter Monday week, we had the Anzac Day on the Friday.
Yeah, so we had a short month.
Yeah, so people take 3 days off, and you get this lengthy 10-day holiday period, just taking 3 days off.
So at the bank, will you in your analytical team, will you sort of make adjustments for all these things?
Well, we try to.
Yeah.
We try to. I mean, it can get a bit complicated, and the ABS sometimes say they do, and they'll often refer to these things, but you don't know quite how serious they were until after the event. But it can cause these funny distortions, like that 1.8% growth number might have been inflated a little bit because of this combination of funny things in the June quarter. Yeah, so we did try and adjust for them.
So just on distortion, so to speak, given the inflation numbers that came out today, what impact has the disappearance of, for example, the $1,000 that the previous Queensland Premier offered prior to the last Queensland election, the bribe?
Vote for me, it didn't work.
Yeah, but they took the $1,000.
Yeah,
and I think it's just expired. What impact does that have, and what impact are you guys baking into when the federal government's electricity rebates drop off? I think this year, at the end of this year,
end of
December. What impact do you think in terms of inflation and or trim mean, do you think it should have for 26? I mean, do you think there could be a jump?
Well, there could be a jump. So, say if you take the situation where that Queensland rebate fell off, so it was about a year ago now, and people got it for a few months till they use it up.
It's like
it's $1,000 off your bill.
Oh, right.
And then if your bill is $300 a month, then it'll take you, 9 and a bit months to use it up. So it would start to drop off now.
Right.
Others, if you've got a big house and use a lot of electricity, you might use it up in a month. But anyway, it's all out of the system. You had something similar in WA, you had something similar in Tasmania. They've all dropped out. And so electricity prices, as measured by the ABS, are up 24.6% on a year ago.
Now.
In the current, up to August.
Which is why we got a 3.
And why we got a 3, because you got that is a big item. I think it was the top of the list, key driver of prices in the 12 months to August. So you've got to allow for that. Then there's the next big event, which is, as you
The
just
federal government,
implied, the federal government's one drop off at the end of this year. So at the moment, it was $75
a quarter.
a quarter, and it's still having distortionary impacts. But as we go into next year, that will drop off. Now, as things stand at present, electricity prices, once that drops out of the system altogether, will jump something like 15%.
And would you expect then the RBA or the ABS, I should say, or what do you think the RBA's stance will be? They'll say, "Oh, inflation's out of control," because that's there forever now, or do you think they'll accept, they'll do some adjustment themselves?
Well, firstly, you've got to assume the federal government doesn't extend it again. They could. I don't think they will because they're not facing
They
re-election.
won the election,
They
so they
won the
don't.
election. They're in there. They've got a big majority. So it probably ends as scheduled. That means your inflation rate might jump up to 3.5%. The RBA should say, well, we're going to look through that, just as we did when the headline inflation rate dropped to 1.9% recently because the rebates came in. They said, well, that's mainly due to the rebates. We're going to focus on the underlying rate. It's more like 2.5, or it's been coming down from the high threes into 2.5. So I think as we go the other way, the RBA should be focusing on the underlying rate, or the trim mean, as they call it, which
Eh,
will strip out those high swings in electricity prices.
But and if you think if when I think about that, that's fine. But the actual cost of living has actually gone up.
Well, that's true. That's true.
And it's nearly. I mean, to be consistent, the RBA should do that, and the
Yeah.
ABS should do that to be consistent. But there is now a new high cost of living, and it's also going to be well, it's only for consumers, so it's not going to affect businesses. There's no change there. But for consumers will have high cost of living, so therefore businesses will have less money to spend. Consumers will have
Yeah,
less money to
they're
spend.
still on our calcs. I think prices over the last 5 years since 2020 are up something like 21%. Wages are up something like 15 to 16%. So households, consumers, whatever you want to call it, you and me, behind by about 5% in real terms. Our wages today by about 5% less than they did 5 years ago.
So
That's the cost of living challenge, which is still there. So yes, wages are now growing at 3.5%. Prices are growing at, well, latest number 3. So there is real wage growth there, but it's going to take years and years before people make up for the loss that they've experienced over the last 5 years.
so do you think? I mean, I've used on it, but I'd be interested in what you got to say. Do you think that the monetary policy, as we know today, which is managed by the RBA, do you think is it as effective as it used to be?
Oh, I think it is. I think it caused a lot, when rates went up, it caused a lot of pain. When rates went down, people got a lot of money and spent and pushed up property prices. So in that sense, it's just as effective. It's just that the RBA, to get prices back down to where they were, and this is something the Reserve Bank was talking about in parliamentary
The
comments earlier
committee
in the week,
inquiry, yeah.
inquiry, economics committee, I think. To get prices back down, you've got to keep rates really high, and then you'd probably have to drop the economy into recession to get prices back down to where they were 5 years ago. It's such that our wages buy as much as they did back then. So I don't think that's going to happen, and they don't want to do that. But the real issue is that I think what's happened here is a lack of productivity in the economy. So it's really an issue for government. We've got to find ways to work smarter. If we're going to put more and more people into things like the NDO, I'm not going to say that that's not worthy spending. There's lots of people with
But
real
it definitely
hardship.
shouldn't be rorted, though.
Yeah, it shouldn't be rorted. And that's where the problem has been, that people have been overcharging. Some people who shouldn't have been getting it have been getting it. And cost growth has been out of control. If we're going to do that, if we're going to put more and more people into the public sector, then we have to realise that the longer term consequence of this will be a permanent reduction in our living standards, that our cost of living will be high because public sector roles are less productive than private sector roles
By definition.
by definition.
They're definitely.
You can debate how big the difference is, but there is a difference there. And lately, something like 4 out of 5 jobs created over the last 2 years have been in mainly public sector or public sector related roles.
And it seems to be that this government, the current government, and not only at federal but at state levels, including Queensland, which is a liberal state, but are starting to pull back on that growth. If they pull back on that growth, in other words, like they're in government now, they probably don't need to do too much,
Mm.
many more appointments, and put out too many big infrastructure jobs that employs thousands
Yeah.
of thousands of people, and they're trying to cull back on the NDIS where they can, etc. If we don't continue to get the growth in employment, in other words, what their part of the mandate is full employment, which is measured by
Mm.
unemployment. So in other words, unemployment sort of starts to grow. At what point do you think that the RBA will get very nervous? And I don't want to use the technical term, but I will. The Nehru. So where do you think the RBA is relative to that? Where were they going to say, "Wait a minute, it's 4.5. That is way too high for unemployment.
Mm.
We are not, executing on our mandate to keep full employment because we therefore we need 3 more rate reductions." What do you think about that?
Well, it's quite possible. If looks like the public sector employment growth is slowing down.
It does
It looks like the government has got,
purposefully.
yeah, but I think they've got the message that this is having an impact, that their
Definitely New South
expansion.
Wales, Shane. Like New
Yeah.
South Wales, but Mookie's has told me, like he is on our podcast, he is reducing the amount of employment of people into the government coffers.
Yeah, yeah.
So federally
Well, so
too.
therefore, the private sector has to fill the role.
But it's not being, it's not been growing.
I know, that's the problem here. And if you don't get that, then it's quite conceivable the unemployment rate, which is currently 4.2, suddenly jumps up to 4.5. Now, the RBA's forecast is 4.3. So if you go to 4.3 and it stabilises,
cool.
they're probably not going to worry.
Yeah.
But if you get up to 4.5, you probably would start to worry, because we know from history that unemployment can feed on itself. Once unemployment starts going up, people feel more cautious. They know their friends, or they know someone who's lost their job, and say, "Oh, gee, I better cut back my spending," and everything tones down. And then you get less spending. Businesses feel less confident. They hire less people, and the whole thing goes into a bit of a downward spiral. So that is the risk in all of this.
Do you think there's a real risk? Is that a risk?
Well, it's not my base case, but
No.
it's a risk worth worrying about. And I think it's critical the next few months. You have to see more private sector jobs coming along to fill the gap left by the public sector. And if you don't see that, then the Reserve Bank, I think, gets very nervous. And yes, they will have to cut by more.
So, and just finally on this, Shane, I think your prediction is there won't be a rate reduction on the 30th of September, so we don't need to get sort of
Well,
labour
that won't happen. But there will be one in November, I think.
I'm hoping so. I'm assuming that we'll get the right amount of data at the end of October. But but just sort of developing this a little bit more, just parking monetary policy for a moment. Where do you think then the government should be with fiscal policy or government policy, government economic policy, to make sure that we don't get an unemployment number that starts to trend towards 4.5, 5, whatever, some other number, to make sure that our economic growth continues to get up to 2.25. Are there things that you would be thinking about that the federal government should be doing relative to fiscal policy for us now to help out monetary policy?
They shouldn't be going on a spending spree. They should be.
I've read you talk about this before, but yes.
Yeah, they should be looking at ways to control spending and, if anything, lower tax rates. That's where the real issue is in Australia. We're paying more and more in tax. If you look at the share of people's income which is being devoted to tax, it's going higher and higher.
As in bracket creep?
Bracket creep.
Yeah.
And the current budget, which came out back in March, it shows a balance in 10 years' time. But the only way we get to balance is not because of spending restraint.
It's bracket creep.
It's because of bracket
more
creep,
tax.
which means everybody, whether you're a high income earner or you're low income earner,
less money.
You're going to be paying more and more of your income in tax.
And you have less net income.
You'll have less net income. And that's been a huge burden on people in the last few years. The big burdens have come from higher interest rates, the reduction in, or the rise in costs associated with higher inflation, wages not keeping up, and then, of course, the surge in tax as a share of income. All of those things have been part of the burden. And the government needs to do things which provide help for the economy, but do so in a way that boosts productivity. And that means tax cuts, I think. Indexing the tax scales, I think, would be one place to start. You probably have to get down corporate tax rates or provide more incentives for businesses to invest. You've got to do things to deregulate. I mean, at least the government seems to be getting the message on this front. You've got to make it easier for developers and home builders to get out there and build homes, build a house in 8 months rather than than a year and a half. They're the sort of things you need to do. They don't all require massive government spending to get that to happen. It's really about fixing the tax system and deregulating the broader economy.
And business investment, of course, is down or still pretty average, pretty flat.
Mm.
It's not, I shouldn't say average, but quite flat. And unless businesses invest, they've got to be incentivized to invest. I mean, that $20,000 or whatever it is that the investment allowance, like, it's just it's ridiculous. It's a joke.
Yeah.
I mean, like, what costs 20 grand? I mean, these cameras in this room cost more than that, and this is a really small business. So if you want businesses to invest into their business, I think one of the only ways I know of is reduce the company tax or reduce the tax burden on us, so we've got more money to invest in the business. Otherwise, we're going to say, no, business is going to say, no, I'm not investing any more money. I'm just making enough money as it is, just, based on how hard I work and, what the business earns. I'm not going to increase my revenue line. So I'm not going to, unless I can get something from you. It's got to be a bit of give and take here. Do you think that in terms of the business community, that we are getting enough interaction between the government and the business community to incentivize us to put more money into, like, if you go to the States, the amount of money that gets invested into AI, et cetera, like,
it's huge.
and their productivity is so good because, relative, and Germany again, whereas ours is dreadful. And I don't know the tax rules over there. I don't know whether it's because they're incentivized or not.
Yeah. See, our tax rate, corporate tax rate is 30%. In the US, I think it's 21 or
very like 20s.
It's at the lower end. It was at the higher end, but they cut it.
Yeah,
they cut it, and there's a whole bunch of cultural factors as well. There's more people with patient capital in the US willing to put money into startups.
There's more money, basically.
There is more money, basically, but the tax system is a big part of it.
Yeah,
and Australian businesses feel, well, I'm losing too much of my income in tax, and on the other hand, everything I want to do takes too long. To employ someone, there's a huge burden around that. All these things are too difficult. And so you've got to free up the burden on business to enable this to happen, but you've also got to do something about the tax system. Do I think the government's getting it? I think they're starting to get it, but yeah.
It's not going to win the votes, I don't think.
Sorry?
They won't win the election. I think that's the issue.
But that's the problem. They don't see votes in it. But ultimately, if they want to keep good growth in employment, to get people's living standards up, then they have to embrace the business community. So they have to introduce policies to do this. Otherwise, we're not going to see good growth in living standards. That 3% number you referred to, it arose because we've had good productivity growth over the last century. And it was reinvigorated by the stuff that Hawke and Keating did in the 80s, and then Howard and Costello did, or continued to do through the 90s into the 2000s. But ever since then, it's sort of all fallen asleep. We just don't do these things. If anything, we put more taxes on, or we just re-regulate, as we've seen in the labour market.
And one final question. What do you think about government incentives for people to buy homes, like, for example, the 5% government guarantee, or it's a sort of mortgage insurance guarantee? First homeowners grants. You just mentioned John Howard. I remember in 2002 election, he doubled the first homeowners grant. But all I remember is that the prices just went up by the same amount. But what do you think about governments?
I don't like any of them.
No, I don't either. But
like if you get in first, you're at the top of the queue, and you get that thing, then fantastic. You get an advantage. But everybody else down the queue, the price just goes up by the same amount. It's ridiculous. Our solution, our generation. I'm a baby boomer. I don't know what you. Our solution to enabling younger people to get in and say, you can get in with 5% deposit, borrow 95%. I mean, this is totally ridiculous.
I would have freaked out.
That's our solution.
I'd
freak out. I mean, I got worried back in the 90s when I was taking out loans. You had to borrow $350,000. I'm thinking, geez, that's a lot of money. Now, of course, it's not much. People got to borrow $1 million or something. But it's a ridiculous situation.
Why do governments keep trotting it out though, Shane? Because
there's votes in it for some.
Yeah, but most of these people who vote for them don't even take advantage of it. So as you say, it's only the people at the front of the queue.
Yeah, I know. They don't get the advantage of it, but they think that it's a handout for them. But it's a mirage.
It is a handout, but then they're paying more. So over time,
more. The only people that get benefit from it are you and me, because our house prices go up.
And then that's probably just a final comment from you. The division, it's becoming
296.
It's become a political division.
Division
of between the haves and the have-nots, and like parents and their kids. And the banker mum and dad. It's nearly a joke, but the banker mum and dad are like, we run a mortgage business. probably of our $2.5 billion that we settled last month for our, we do about
Yeah.
$2.5 billion a month. I would say 30% of those applicants were assisted by the parents,
Yeah. Yeah.
and
It's a lot.
that's massive. We're talking
It's
about
massive.
nearly $1 billion
But
just
that's
in
not a
my
fair
business.
outcome. If your parents are well off, then you're okay. If not, then you're not in trouble.
It's not a fair outcome for those people who don't have wealthy parents. By the way, it's not a fair outcome for parents who are
Yeah,
wealthy.
yeah.
I mean, they're happy to help. They're happy to help, but they probably
So
prefer not.
I didn't have to rely on my parents
No,
or
my
a
parents didn't
low
have any money.
deposit scheme or anything wacky like that. I mean, we did have first home owners grants because I remember Hawke and Keating used it and Howard, but that was in a time when house price to income ratios were a lot more modest than they are now, and they would usually wheel them out when there's a recession on. You wheel that out because the economy is depressed. You want more people to build homes. Fair enough. That's one way to encourage it. Now it's just wheeled out just to keep to enable people to get in, but it's not designed really to build more homes. It's really just to enable them to get in, which just pushes prices up.
You're right, because Howard wheeled that out before the election because there was an affordability problem here in Australia, big time,
Yeah.
and that we had gone through a dip. So if you remember, it might have been 2001, not 2002, but
we had a bit of a dip then.
in 2000,
the economy
it dropped off a bit because that was 2000 when they introduced the GST, July 2000.
Yeah, the GST brought forward a whole bunch of activity, and it sort of fell into a hole.
Yeah,
including with housing. So it fell into a hole post the Olympics and post the GST.
It was the first quarter I recall in recorded history that the mortgage market didn't grow.
Yeah.
And because I remember Kerry Packer ringing me up and saying, "Son, how come we're going backwards for this quarter?" And I had to go off and explain it to him, and it wasn't a pleasant conversation. I'll never forget the conversation for the rest of my life. But and you're right, there was a downturn. There was a downturn in that period, and because I remember in the beginning of 2001, beginning of that year, the RBA dropped rates in the February meeting, and I remember it well because I remember thinking the money markets were telling us that they were going to do in those days. It was rare that the RBA did not do what the money market was saying, and we actually dropped our rate before the RBA meeting, just being a bit cheeky. And Kerry said to me, he said, "Son, if you get this wrong, you'll be paying me the money that we lose for dropping our rates." It was only on new loans, but dropping our rates ahead of the RBA. And I remember I was shitting myself for about 2 weeks. It was actually 1.5 weeks. We called it. I don't know. We're so lucky, thank God. But today I would never do something like that because it's the unpredictability of our RBA, like what we were talking about earlier on. It's sort of topsy turvy at the moment, and I'd be too frightened to do anything at the moment because and uncertainty and unpredictability is a problem in economies.
Oh, it's a big problem.
Like everybody finds it difficult. So if you look forward as the bank, as the chief economist of the AMP Bank, AMP Group, which includes the AMP Bank, what do you think for the next 12 months? We're not expecting it, tell me by month, but what do you think for the next 12 months in terms of the official rate? Where do you think we're going to land? I know it's a long way out.
I think we've still got several more cuts. So one in November. The Reserve Bank have said that they want to ease in a cautious and measured way. So that probably means every quarter. So one in November, another one in February, and probably another one in May. So that will take the cash rate, currently 3.6, down to 2.85%.
And do you think that will be the sweet spot?
Well, hopefully. I mean, the Reserve Bank's own analysis would suggest that their neutral rate, it's a bit hard to work out what precisely it is, the rate of interest, which is neither causing the economy to expand or contract, is around 2.9%. So that's why we've got 2.85. 2.85 is just the where you end up with 3.25% moves.
That's interesting because, and I'll finish off on this, but can you imagine if the rate of growth, GDP growth was 2.7.
Yeah.
The rate of the official rate was 2.8, 2.85. Inflation.
Similar number.
Similar number. Here we got this sort of equilibrium. Wages growth hopefully is a bit better than that, but everything's sort of a bit of an equilibrium all around the same, sort of around the threes. So it'll be like it's a bit like going to the casino and we're doing the triple threes or the 4 threes. We're gonna have to throw something.
Except unemployment, it'll be a little bit higher.
Yeah, well, it'd be nice to see unemployment down that territory if we can get it down that territory. But and do you think the Reserve Bank? And I don't mean this in a criticism sense point of view, but do you think the Reserve Bank will get us to where they want? That is, good unemployment numbers, good inflation numbers, a less restrictive interest rate,
Mm.
do you think they'll get us to where they want us to be? I mean, because that is an ideal world, or do you think
Yeah.
they really need to take us into a sort of bit of a
Like
deep
I
dark
don't
hole
think they want us to knock us into a recession. If that were the case, then they would have raised rates
before more aggressively?
more aggressively, like New Zealand has done, and they have gone into recession, and their property market is cactus
Yeah, yeah,
at present in terms of
totally.
house prices.
And they
So
just had another rate reduction, I think. So,
yeah,
so like,
so that was last week. So I don't think they wanted. I don't think the Reserve Bank wants to do that.
yeah, that's
They don't
interesting.
want to have a recession here.
So therefore, they're looking for that sort of Goldilocks
They're
position.
looking for a sweet spot,
Yeah,
which means you get your rate of inflation down and your interest rates down. But the only niggling sort of annoyance in the whole thing is that prices are still going to be
high.
relatively high. It's just they're not going up at the same rate anymore.
Well, that one will only be sold by supply.
That's right. You've got to boost the supply side of the economy. You've got to encourage, well, we've just been talking, encourage businesses to invest, encourage more people to get out there and work longer hours, and more people to take up AI, do the sort of things you're seeing in the US.
Yeah. Dr. Shane Oliver, thanks very much. I appreciate it.
My pleasure. Thanks for having me.
You're welcome.